Hey, hey guys, do you see the...
Hey guys, Rafi here from the End Game Investor, and I'm here with Sam Lowry. I'm wearing my colorblind sunglasses in chroma. Give them a shout out to people who can't see colors very well, because I just came from the car. I got stuck in a traffic jam. We were scheduled for 10 minutes ago. I didn't want to make him wait. He is a partner of John Adams, the silver guy of Australia, who is he's really I don't even want to. He's a great guy, and he gave me a lot of faith and a lot of spiritual strength during the worst years. His fight for justice is it's pretty up there in our community, and it's really amazing to me how our corner of the gold and silver world sort of finds each other, and we really have our corner of it. We have the best people. I mean, the most idealistic, the most hard fighting, and the most logical, rational people, I think. Not to call others gold and silver stackers irrational, but I think we've got the focus on the right stuff. So I'm excited to welcome Sam, and he'll tell you what he wants to talk about, and we'll talk about it. So hey Sam,
Awesome.
thanks for coming on my show.
Pleasure, Rafi. Pleasure to be here. I've been watching you for years, so it's surreal to come on your show. But yeah, great to be here. Yeah.
Good. So you work with John Adams. You live in Melbourne, and you wanted to discuss a possible black swan event around an
Mhm.
event in 2015. You said, what are you talking about? What does it have to do with gold and silver?
Yeah, absolutely, absolutely. So first things first, I work with John. We've just started up a new bullion dealer together called Adams Bullion here in Melbourne, Australia. So if you're an Australian, by all means, check us out. But the event that you've mentioned that I want to talk about today is the Swiss National Bank flash crash of 2015. So on January 15th, 2015, the
Is
Swiss
that the
National
euro? Was that the euro?
the
The
yes, you
euro
got it.
Swiss franc exchange rate thing?
Exactly. You've got it. So you're absolutely right. On the 15th, they withdrew the currency peg. So they were artificially manipulating the market through a currency peg. They withdrew that peg out of nowhere. Up until days before that, they were saying that they were going to keep the peg in place, lying to the market, essentially. Central banks lying. That had never happened. But the point being that after they removed the peg, chaos ensued. So within 5 minutes, that exchange rate that you've mentioned, the euro against the Swiss franc, that dropped by around 40%, which in currency land is absolutely unheard of. To give you an idea, if you're trading currencies, a 1% move for the whole day is a big day. So 40% in 5 minutes, it's black swan event material. It's unheard of. So the market reacted in quite an interesting manner. So one of the companies I'll talk about mainly is FXCM. So they're a broker. You can trade currencies with them, like the euro against the Swiss franc. And they suffered over $200 million in losses from this event. So as I said, within 5 minutes, it dropped. There's a huge range, massive spreads to get in. So it was just unreal as an event, and it blew a lot of traders out of the water. So something that was really surreal about it was the lack of liquidity. Now, that doesn't sound like much when you say it, but for traders who have stop losses in place, trading with big leverage, you need liquidity to fill those stops. So, for people who thought they were risking, say, $1,000 on this trade, the most they could lose is $1,000. Well, a lot of them lost their entire trading account, $100,000 gone, and some of them even.
How did mechanically, can you explain mechanically how that happens? Because I
Yeah,
get
yeah.
the concept, but what is actually happening step by step to make them actually lose 100,000 when they've only staked 1,000? How does that happen?
Absolutely. So let's just run a little example for a second. So let's just say that the price is 1.2 and they get in. So it's 1.2. Now, let's say they've got a stop loss at 1.1. Okay, so stop loss at 1.1, price is at 1.2. Fantastic. Now, this event happens and then price moves all of a sudden from 1.2 down to 0.5. There is nothing in between. There are no orders in between to fill your 1.1 stop loss at. So you get
Oh,
filled at 0.5, even though your
okay.
stop loss is at 1.1. So, and that's what I don't think many traders are aware of the risk of is a liquidity event like
Okay,
that,
so
where
really when you run a stop loss, what you're really saying is try to get me out as close to 1.1 as possible.
Yes, yes, absolutely. And in normal market conditions, it works perfectly. Price is at 1.1, your stop loss gets triggered, you're out of the trade. Oh, well, you made a loss, move on to the next one. Everything's okay.
Really, this is in a different way and in a different derivative layer. This is really the same thing that happens in a hyperinflationary scenario where gold is going to infinity and a currency goes to zero. It's
absolutely
the same thing, except with the gold price instead of some currency against another currency. It's the same thing.
Yes, yes, exactly. So, and people say, oh, is it possible these black swan events that you're talking about, where there is just no sell price on gold? People just won't sell it on the way up. That sort of thing, and it's hard to conceptualize in normal market conditions where everything's working as it should and perfectly, and stops are getting filled and everything like that. But what I'm talking about here is an event where normal market conditions no longer matter.
Right. It's not even a question of whether this can happen. We're not discussing here between us, well, this could happen and maybe it won't happen. Maybe the world will go on just as it is forever and everything will be fine. Maybe this will never happen. No, it will happen. We just don't know when or how. And why must it happen? Because the entire world is based on a money substitute. I don't want to say fiat. I don't like the word fiat, but I use it because people understand what generally colloquially it means. Like, it's built on a fiat lie. And all of this stuff has got to go away, and it's going to go away suddenly at some point, and it's coming closer. So the black swan is inevitable. Exactly what the trigger is, I think you have a case for what it might be. I have a case for what it might be, but it's always changing because I never know what it's going to be exactly. It's just going to be something.
I honestly don't know what it is, and I don't know when it is. So if you're asking me when is it going to happen, I've got no idea. But all I'm saying is, things have happened like this in the past, and I'm right with you. I think that what cannot last will not last. In terms of what could trigger it, I mean, in this event, it was the Swiss National Bank saying, "Hey, we withdraw the peg," but that's some small central bank in a country that, on the global scale, isn't too important. Imagine if the Federal Reserve did something like that. Imagine if the European Central Bank did something like that. It boggles the mind to think about.
Yeah, well, what the Fed will have to do as the reserve. I was just discussing this in a video that I recorded today, and I just uploaded it with Phil Lowe, but it's fresh in my mind now. So what you're describing is when the Swiss National Bank gave up on the euro, fine, and the euro went down 40% against the Swiss franc, fine. So when you're that's talking about the interplay between two dollar derivatives. One of them is the euro, and the other one is the Swiss franc. Now, when you're talking about the dollar itself, it's going to be the same exact story with the Federal Reserve, except what peg are they going to change? They're going to change their peg to gold. And what is the Fed's peg to gold on the dollar? $42.22 an ounce, right? And we were discussing, what if, talk about gold revaluation account. I mean, we've heard murmurings of this already out of the ECB, but if the Fed were to bring its gold reserves up from $42.22 to the market price now, which is, let's say, $2,000 or something close to it, then that is the statutory rate for gold, and then the market rate for gold goes up to like 60 to 90,000 or something like that. That's what would happen, because you always have a price differential between what the theoretical price of gold is on the Fed's window, which is closed and only theoretically open at some indefinite time in the future that will never happen, versus gold you can get right now. So there's obviously a huge premium on gold and silver you can get right now, which is that premium over $42.22 an ounce that the Fed has designed as the price.
Absolutely. And on that note as well, another thing I wanted to add was counterparty risk into this discussion, where in the event that I'm talking about here, minor event, multiple brokers went bust that day. Brokers that have been in business for years and years just gone. So when you talk about how to profit from an event like this, if you were trading with one of these brokers and you got the trade right, they're out of business. Good luck getting paid out.
Yeah, so it happened with nickel, right? Yeah.
Exactly. So that goes back to the bullion argument of, okay, well, if you see this massive price increase coming and the derivatives sector may shake apart, well, then you can't use the derivatives sector to profit from this price move. You have to be in the physical.
Yes. Yeah, exactly. And this is exactly what we're talking about. If the Fed were to revalue gold just to $2,000, and the price of gold derivatives in futures markets goes to $60,000, $70,000, $80,000, and then the price of physical gold over that goes even higher, because how are you going to get the physical? Then what happens to the price of everything? Suddenly you're going to Starbucks and coffee is like $70 a cup. That's what happens. and then everybody sells everything that they have just so they can survive for the next day to have the food that they want. And then the stackers, all of a sudden, they can buy like, that's what I keep saying. They can buy a house for like 75 ounces or $100 bill, or 5 ounces of gold or whatever it is, because that's when we start taking over everything. And
Yep, six bedroom homes in Berlin.
and
I'm
I'm not,
waiting.
and really honestly, I'm not excited about that. I'm really not.
No.
It's not. I don't want all this stuff. I just know
Oh,
well, we're gonna have to administer it because everyone else is gonna be broke.
absolutely. And people say to me, I've had multiple people say to me in the past, be careful what you wish for. Do you really want to live in a world where silver's $1,000 an ounce? And by all means, I completely understand what they're saying.
You don't wish it.
Crime,
And I
economy.
don't wish this. You don't wish it. None of us want this.
No.
We just know it's happening. We know it's going to happen. And
Yep.
all we can do is just talk and scream and warn. And if we make a little bit of a living doing that, then fine, because that's what I want to do with my time anyway, because I'm trying to keep
Mhm.
people safe.
Yep, absolutely. I mean, gold and silver making people safe from what's coming. I absolutely love what we both do here. So I'm right with you. I feel great about it. But I mean, yeah, looking down at what's coming towards us, like you've said, you don't want it to be true, but all we can do is read the writing on the wall and prepare accordingly. So it's yeah. On that note, things coming towards us. Last week we had Evergrande or Evergrande, however you pronounce it, going
How do you
bankrupt in
pronounce
New
in
York.
Chinese, in Mandarin? Sorry. Do you know how to? I don't know.
So yes, that's something big to be watching. I mean, Chinese real estate, last time I checked, was the largest investment asset class in the world by value. So if they're having issues in that market, that's something to keep an eye on, to say the least. And that's really just overshadowing what happened, in the last couple of weeks with the Bank of Japan, them unwinding their yield curve control policies, moving back towards higher interest rates, which we all know they can't afford
Just
given
another
their
deteriorating peg. That's what their YCC is. It's the same peg you're talking about with the stupid
yeah.
euro and the Swiss franc, and it's all the same thing.
Well, on that note, I mean, a few months ago, I was speaking to a few colleagues of mine. I was working at a broker here in Melbourne, and I was speaking to them about the Japanese yen, saying, well, guys, I mean, if the Japanese central bank are saying that, hey, we're going to buy an unlimited amount of Japanese government bonds to support the market, and we all know that they have to print money out of thin air to do that, then by extension, what they've told you is we're going to print an unlimited amount of Japanese yen. If
Yeah.
you're a Japanese yen holder and you hear that, does that fill you with confidence? To me, I would be getting out of it as quickly as possible. And if you look at the gold price in yen, it shows that.
Yeah. Yeah, Japan could be one of the black swans. Something, there's going to be one of them that knocks the rest of them over, and it's coming soon. I think there's one more financial crisis, and that'll be it. And
Yep.
at that point, I fear the real end game where everything falls over and the internet goes down and people start panicking, and you want to be away from the big city centers. I mean, that's what I'm preparing for, in the wisest, most level-headed way that I can without panicking.
Yep.
But it's coming. It's coming. And what you went through in Melbourne, I don't want to use any keywords here, and we'll keep it nice and censored for the whatever bots are watching us. But theoretically in my head, one of the places that I would have wanted to run away to in an end game scenario would have been Australia. I wasn't going to do that because I'm going to stay in Israel no matter what. That's where I belong. And I want to be with my people. But Australia seemed to me to be, away from other things and relatively more sane. But then, bam, 2020, 2021 happened, and they went totally mad, and it shocked me. I couldn't believe it.
It shocked me as well. As an Australian, it really fractured a few beliefs that I had about my fellow Australians. I always saw it as a really laid back people, very relaxed, larrikins, not very fond of authority. We're a nation of convicts, right? So, I thought a lot better of my fellow Australians. Living through lockdown in Melbourne, it was surreal. It was, I mean, lockdown capital of the world, right? So living through that, it really changed my outlook on a few things. But towards the end of it, I mean, you know, they had a gathering in a park here where there were hundreds of thousands of people that showed up, and you know that really filled me with hope. But I mean, yeah, like you're saying, it was a surreal time to be alive, particularly in Melbourne. I speak to, you know, friends of mine across Australia and family members, and we all had a different experience, of course. But Melbourne was definitely the most extreme. So it was surreal.
Yeah. What else do you want to talk about?
So I guess something to expand on there with the Japanese. Not a lot of people, I think, talk about the carry trade much. So I mean, I'm a trader, right? I come from a trading background, derivatives, all of that. So when I look at the Japanese yen and I look at them moving away from this yield curve control policy, I see a massive potential unwind in the carry trade, the US dollar against the Japanese yen.
Can
So
you
what is
explain
it?
what that is? Yeah. Oh yeah, right.
Yeah.
When you
Yeah.
say
So
carry
what is
trade, what do you mean?
Exactly. So a carry trade. So in Forex trading, FX trading, you can actually be paid to keep a trade open. Now it sounds surreal, but the way it works is when you're trading two currencies, each currency has a different interest rate. Their central bank has an interest rate, their central bank has an interest rate, and there's a difference between those two interest rates. Now, if you hop on the right side of the trade, you can essentially collect that difference. So every month, year, whatever that you hold the trade open, you're slowly getting paid little bit by bit to keep that trade open. Now that incentivizes more people to hop in the trade, which moves price in the direction of the carry trade.
So let's use it. Let's use an example, right? So dollar interest rates. If you go long dollar, short yen, right? You earn let's say the reverse repo rate or the overnight funds rate or whatever it is, and you pay the Japanese rate, whatever that is, and then you
Yes,
the difference. That's the principle?
absolutely. So if the US has got interest rates at say 5.5, we'll call it 5.5, and we'll say that the Japanese have interest rates at 0.5%, just for argument's sake here, easy numbers, then that's a 5 percentage point difference. So you would collect 5 percentage points of your trade size per year. So if you've got a $100,000 trade, 5% of 100 grand, you're collecting $5,000 a year just to keep your trade open. And that's before you're talking about where price is moving.
This seems to be like fuel for an eventual explosion. This does not seem to be that it is natural or sustainable in any way, even in the medium term. This is going to be some kind of blow up. I just don't know how mechanically it's going to happen, but this is not natural.
Absolutely. And that you're absolutely right. And that's why I talk about the unwind of the carry trade, because everyone's hopped in this carry trade. They've said, oh, get the difference. Yep. And if you look at the US dollar against the Japanese yen, the US dollar has gone up against the Japanese yen over, you know, at least the last 5 to 10 years.
Well, it would if you're paid 5.5% to hold dollars and short yen. Yeah.
Exactly. So you're winning on the carry trade. You're winning on price moving in your favor. It's almost a no-brainer until it all goes wrong, until the unwind, until people start getting stopped out of their trades, and it's a cascade. You know, on the way down, it's on the way up, it's a staircase. On the way down, it's the elevator, right? And that unwind is very, very bad for the US because it means that Japanese investors are repatriating their capital. They can get a higher interest rate in Japan now. I'm not going to leave my money in the US. I'll just bring it home. And that is bad for US markets because it sucks capital out of them.
Yeah. I'm trying to picture. You're talking about the mechanics on a micro level of what is actually happening when this unwind is going. So theoretically, it could be something like what is this what you're leading to? Something what happened with the euro and the Swiss franc, right? The Swiss National Bank just gave up its peg, and the Swiss franc went up 40% against the euro. I mean, something like that. Can you maybe you can explain why did the SNB feel that it had to do that to that extent? Were they expecting a 40% move? They must have been expecting a double-digit move or something. And even if whatever they were expecting, you know, the Bank of Japan is going to find itself in similar straits at some point with whatever peg it's trying to maintain, and it's going to release the peg, and you're going to have this massive thing that's going to, unwind these carry trades, and you're just going to have a tsunami or a nuclear explosion of something. I don't even know what it's going to look like.
Absolutely. So touching on quickly, the SNB, they pulled that peg for a reason. Now you can research into it. Essentially, to maintain that peg, they had to print a lot of their own currency, and that was having issues on the domestic economy. So they decided that we're not going to do that anymore.
Yeah, you know what? The bastards probably called up their families and said, "Look, I want you to open up brokerage accounts in some other name from your second cousin, and then go along the Swiss franc against the euro, and then they would be personally they probably did that, those little pieces of shit. But yeah, what can I do?"
Probably. I mean, if you look at the Federal Reserve and how many Fed members sold the top of that 2020 or 2021 stock market rally, we there's ethics concerns in holding stocks now at the peak. There weren't concerns for the last 20 years that they held them, but now there are. I mean, I hinted at that earlier, the idea that central banks might be lying to you. I mean, with the Japanese central bank, they've said, oh, well, I mean, as little as 3 months ago, they're saying we're going to print an unlimited amount of yen to buy an unlimited amount of Japanese government bonds, and we're going to support the market. And then now they've changed their tune and they're saying, oh, we're going to back off on all that. We're going to, raise interest rates. We're going to move away from yield curve control policy. They're changing their tune, neither of which will work out well. If they raise rates, well, they've been too much debt, it'll all collapse. They'll have a sovereign debt crisis. If they don't raise rates, the yen's toast. Central banks around the world are in a corner. The Federal Reserve's in a corner between inflation and their debt. So it just.
So let's go back. Let's go back a second to what do you have an opinion about what caused the SNB to suddenly release that peg? What pressure were they on? Is the Bank of Japan under that same pressure? Well, they are. That's what I just don't know to what degree. And when, and not when, but like, how do you think this breaks? Does this break? I don't know if Japan's going to be the domino that causes the rest, or just another big domino in a series of big dominoes where it's in the middle or the end or whatever. It's somewhere there.
Mm-hmm. Absolutely. So the pressure is on the Japanese. Absolutely. I mean, if you look at Japanese voters, what they've experienced is their currency massively losing value, high inflation, everything's, it's not good to be a Japanese consumer right now. The yen is, I mean, if you look at it against the US dollar, it is absolutely dropped through the floor. And if you earn yen, if you spend in yen, that is absolutely not good for you, right? So the political pressure is on to fix that problem. Now, the Japanese have a few ways of doing it. I mean, back a few months ago when the yen was looking like absolute toast, what they did was being the world's largest holder of US treasuries outside of the US, that is, what they did was they sold some US bonds, they got US dollars for them, and then they sold those US dollars for Japanese yen on a scale large enough to bring the exchange rate back down in their favor again. So if that is their only option to defend their currency, is to start selling off US treasuries, US treasury bonds, converting those US dollars into yen.
That's not going to work. It's not going to work because when you sell US treasuries, you're raising interest rates in the US and you're increasing the differential between the yen and the dollar, and you're encouraging the carry trade to sell yen and buy dollars. It doesn't
Exactly. And on top of everything you just said, that's not good for the US either. Going back to the unwind of the carry trade, hurting the US, that's selling US treasuries, selling lots of US treasuries at a time when the US government is, printing all this money. It needs funding. It's spending like a drunken sailor, and it gets it through the debt markets. It's does the Fed step in and buy up all these bonds that the Japanese are selling? It opens up a whole new can of worms.
Okay, they're screwed anyway, either way, and most of the people that are not listening to us are going to be screwed also. And hopefully we can help out to the best of our ability, and everyone defend yourself.
Mm-hmm. That's it. Physical gold and silver. It's worked over 5,000 years. Yeah. Gold is money.
Okay, so there's what do you want to share with my audience here? Any links, anything, any place you want them to see? What are you and John up to that we can help with, or
absolutely,
be clients of?
Absolutely. So you can check out our website, adamsbullion.com. Loads of great information on there. You can also follow us on social media. We've got a Twitter account, we've got an Instagram account, Facebook account. So by all means, you can follow us all there. John's got his own accounts as well for what he's doing. He's fighting a big fight against ASIC here in Australia at the moment. That's our regulator, our kind of SEC sort of thing. So he's got a few big things in with them at the moment. So keep an eye on that space. It's quite interesting, to say the least, particularly if you're an Australian. But yeah, check us out on social media, check out the website, and check out what John's doing. You know, keep your eyes peeled on us, because John's got big news coming soon. But yeah, there's a lot going on. Yeah.
Good. I'm excited. All right,
Yeah.
let's get this over with. Let's move. I don't know if it's like in the air or the energy, but like if you were to tell me, if we were alive in the 1950s and I understood what I understood now, and you were to tell me like, when is this going to blow, I was like, no, it's going to take a while. Like, you know, it's going to take many years. But it's not going to take many years from here. It's somewhere close. It's somewhere close, and definitely both of our lifetimes. Or I would look for some other living.
Yes. Yeah. Well,
I wouldn't be doing this in the 50s. Ron Paul has been doing this since the 70s. He was a little bit early, but he's still with us, and hopefully he'll see it too.
Yes, I'm a big fan of Ron. But yes, it's a surreal time to be alive. I mean, I'm not a particularly old market participant. I've seen multiple once in a lifetime events in my life, multiple globally significant investment banks going down, Credit Suisse most recently, Lehman Brothers and Bear Stearns back in 2008. So, you know, how many once in a lifetime events can you have? You know what I mean? It's a crazy time to be alive, and a crazy time to be in the financial markets.
Yeah, like in my drive back here, I was caught in a traffic jam, and I was like there's the traffic jam itself. Like, there's so many cars, there's so much gas burning, there's so much the buildings everywhere, and all this wealth. And then, like, if you've ever seen Stranger Things, when somebody gets caught in the upside down, he's got flashbacks of the upside down. It's this other, you know, nether world. Like, it kind of flashes in my eyes, like this is all an illusion. Everything that's going on here.
Are you okay?
It's all based on a false gold exchange rate with the dollar that is going to fall suddenly, and all this is going to stop. It's all going to stop, because when gold is revalued and gas is suddenly $80-90 a gallon or some sick amount like that, who is going to drive a car for $80-90 a gallon? These cars are all going to be all off the road. Cars are going to be dirt cheap, and food is going to be damn expensive. And we're going to have to come in, and we're going to have to inject gold and silver all over the place, just spread it, buy whatever we can. Meaning, it's not about buying, it's about providing gold and silver in exchange for what are basically worthless assets denominated in gold and silver. That it's going to be a jump start of the economy, and we're the ones with the cables.
Yep, providing liquidity is another way to think about it, because people, like you say, it's an economy with no money, and you're putting real money into it, you know, and that circulates, and that creates economic activity, but without it, nothing happens. So yeah,
it's not a lead acid battery, it's a gold silver battery. Jump it.
Get those cables out. But yeah, it'll be surreal living through what's to come. I mean, obviously none of us can say exactly what's to come, but it's surreal at the moment. All right. So
all right, it was great talking to you. We should do this again sometime, and keep me updated about your activities, and we will put all the links in the description. Send them to me in email, so like I can just put them in. And I'll put this up in I don't know, what day is it? Monday? Let's see, I'm flying tomorrow. I'll put this up probably Thursday when I get back to Israel.
Awesome. Well, it's been an absolute pleasure speaking to you, Rafi. And yeah, after watching you for years, it's surreal to hop on a call with you. But yeah, looking forward to doing so again in the future. Yeah.
Cool. Okay. Have a good day, man.
Thanks, Rafi. You too.
I needed some air.
Come on. You're up on Dig Dug. Let's take that top score back, huh?